Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott from Oldham, Greater Manchester. My name's Matthew Taylor.
I'm Katie Allan.
And I'm Lauren Thompson.
Welcome to the Ledger Lounge. Hi and welcome back to the Ledger Lounge with me, Matthew Taylor, Lauren and Katie.
Hi.
In this episode, we're going to cover a couple of topics that are shaking up the accounting world. The buzz from the digital accountancy show that Katie and I went to last week, and the ever misunderstood director's loan accounts.
It's a big one.
So DAS.
I didn't go, so tell me all about it.
You missed out, Lauren. You really did miss out. It was actually really good. I mean, the first talk that we went to was all about how to launch your own podcast, wasn't it? So we was quite smug in the back.
We were judging, weren't we? We were judging the
quite a lot of the things that they was doing. I was giving a little, we do that. Ooh, we do that.
Yeah.
It was really good.
Yeah.
Was there anything in that you thought, I'll bring that back and use it here?
I think it was more about the original concept of setting this up was to try and relate it back to information on the website and bring it in. And something that came out of it was maybe do a little bit more about what interests you. I think lean into it as yourself rather than being driven by content. So maybe our original purpose for this has shifted a little bit to what we're thinking at the time rather than what we're putting out on the website.
Yeah, that's good.
There were three speakers talking about it, and I can't remember the names of their podcasts, but one of them has ended up doing one with her therapist.
Oh, wow.
And they just sit in a cafe every week, and she gets free therapy and she gets free accountancy advice.
That's really
Couch to something it was called, wasn't it? Couch to, yeah.
No, was it Future Cloud?
That was the name of the accountancy firm, but Couch to...
Couch to
and then there was another one that does it.
Couch to Coach or something like that, maybe.
Right.
Yeah.
There was another guy, I think he owned his own practice that started one, and it's took off. But he literally just goes around and asks his clients questions and talks to them about, but records it.
Oh, interesting.
He was quite interesting. But yeah, we was very smug at the end of it when we were like...
Ask the accountant was one, wasn't it? It was called,
Yeah.
Although should we be promoting
I was
another
actually
podcast?
surprised at how many accountants are doing podcasts.
That's the way it's going, I suppose, though, isn't it?
Yeah, well, they're all following us, are they? Or are they?
Yeah.
I think some are a little bit ahead of us. I think, with
150 episodes.
That's right, yes.
Wow,
whereas
maybe
we're
one day.
episode, whatever we're on.
I'll be nearly retired by then.
So I think we got a lot out of that. I think that was good. And then there was another talk on selecting software, which... Not being a tech magpie, so going around and just collecting bits of software that you never use or you take back to the office and say this is the best thing since sliced bread.
When actually it's probably
when actually it's not, or you've not got the time to. If it's not solving a problem, it isn't a problem. It isn't the best thing since sliced bread.
There was still a lot about AI again. I know there was last year, but this year I did feel like it was more relevant. There was more to it. What did they say? Like the robotic accountant or something like that. And I was a bit like, ooh, that's interesting.
I think each year that you go, it's going to develop further and further.
It's massively. I think 2 years ago we went and they said AI is coming and there was sort of some very high level AI stuff. Then last year it was AI's here, but we don't really know what we're doing with it or what to do with it. And this year it's right, this is what you're doing with AI. This is what you should be doing.
Yeah, it was quite interesting to know what people actually use it for. It's not just for bookkeeping or anything. They use it for all sorts, don't they? The blog posts on the websites and
I've now got an avatar generated by AI that I can upload a script to.
That he got. Oh, it was weird, wasn't it?
Yeah, the voice isn't quite right yet.
No, the voice was a little bit posh.
I think it's because he recorded it in Chelsea in London, so maybe it had a little...
Yeah, it definitely had that
southern twang.
It did. Yeah, I found a way of uploading my own voice now that we can then...
It's also a bit scary, that, though, because you didn't say any of that, but yet you showed me a video of you, and it just looks completely
It does
normal.
make you wonder what you like watching and things online. I look now and I think, is that actually them?
Well, there's a thing on... well, I could still call it Twitter, but it's X now. And if something's AI generated, it will tell you underneath.
Oh, will it?
Right.
If
That's
you know,
good.
there's somebody's posted whatever a video of an animal, it'll say this is AI generated.
Right.
I think that's quite good, actually.
Yeah. Is Donald Trump really saying what Donald Trump is saying?
I hope
He
not.
is AI.
We went to see one of the vendors, didn't we? That Otto, or with Otto.
With Otto.
Risotto,
yes.
you can call it. That's what we've called the bot now.
Risotto.
Risotto.
Oh, is this a new bot?
Yeah, so this is something that's going to help us with our processing.
Okay.
And yeah, Katie came up with a very catchy name, Riz.
Yeah.
Riz.
Well, I didn't want to put
Risotto.
the user as like Otto bot or Otto robot, and then Matthew, you said with Otto, and I was like, oh, I thought you said risotto then, and I was like, oh, that's it, it's
There we
stuck,
go.
Risotto.
That's it. Yeah.
Is the middle
So
name
new member
mushroom?
of staff, Risotto.
Yeah, risotto. No, we're trialing it for a month, I think, isn't it? So just to see whether it can help.
So what
with
does
anything.
that? What does that one do?
Similar to bots for that, it'll do your green matches in zero. But however, you can train, like, there's a lot more in the background, isn't there, to train it, i.e. you can log into the portal and it'll say, I thought that this was a match, but I didn't match it because I wasn't very confident, and you can say, well, you should have done.
Yeah.
And then it'll
learn.
yeah.
Right, that's
So
really interesting, isn't it? I don't think we'll be out of a job yet, but I think it frees up accountants' time to do more interesting and more valuable.
I think having the
to the
time to
clients.
look at the figures as well and actually understand what's going on, rather than spend the first day of the week doing your bookkeeping and not really looking at the bigger picture.
Yeah, it gives us the opportunity to not be doing just pressing OK and on in software and take out the mundane out of the process, and then, like you say, frees you up to look at the numbers, work with your clients, and advise them and make their businesses better. Yeah, which is what our aim is.
Yeah, that's what we want to be doing, really, rather than Bancrack.
And Matthew created an AI image of Riz.
I did.
You?
Yes. So
what
I've
does
got a
she look
headshot
like?
now.
Is it a she?
It's a man.
It's a man.
Yeah,
all right.
came out as a man. ChatGPT produced it.
What's he look
So
like?
now we're all obsessed with AI after DAS.
Yeah. And then we caught up with the managing director of Zero in the UK. I was talking to him about late payments because we did a piece on late payments.
Yeah,
last week.
last time
So
we did,
he gave us a quote or a soundbite that really useful. So a little bit of an interview with him.
Oh, let's hear it.
At Zero, we're confronted with small businesses on a daily basis, and the one topic that comes up every single time is cash flow, cash flow, cash flow. When you look at the reasons for cash flow, the number one culprit oftentimes is I'm not getting paid on time, or I'm not getting paid. And one of the beauties is you can actually help payments through the use of software in many ways. Obviously, software helps you be on top of your payments. You know what's come in and what's gone out. It helps you issue invoices and make sure that you know which invoices are being paid on time or delayed, so you can then chase them. And the reality is, when you look at the use of software to be on top of your numbers, payments is probably one of the immediate beneficiaries of that. So critical for small businesses and critical for the accountants and bookkeepers that support those small businesses.
I was going to say his name, but I'm not sure I can say it right. I'll try it. It's
Go on.
Alex von Schurmeister.
I think that was a good effort.
Yeah.
Ali Von.
if it's not, we can re-record that one.
So Accountex next, Lauren.
Yep, I'm going there on the 14th and 15th of May down to London with Tom and Brendan, actually, aren't I? There's only
Yep.
3 of us going.
3 of you going, yes.
I know. Last time I went, there was loads. Now there's just us 3. I'll have to keep them in line, won't
Yep.
I?
Make sure you don't miss the train.
Yeah. Brendan will be in dad mode, won't he? Carrying all of our bags and running to the train station. But no, I'm looking forward to going, catching up with our software providers, and hopefully going to see some really interesting talks. There's a couple that I do want to go and see, actually. The MTD for sole traders, which is coming in for April 26. So there's going to be loads of speakers on that. So I'm definitely going to go to those.
Yeah.
And then I think probably I'm going to go to the tax implications for 25-26. Lots of fun. But we need to know, don't we?
Yes.
And then probably they do a lot of nice personal development talks, team talks, and sort of taking the being human, which I think is one of the values of our firm as well, isn't it? That being a human accountant rather than the way that accountants are stereotyped. So I think I'm definitely going to attend some of those. And I'm not bringing any merch back.
Really?
Whatever Brendan says, I'm not doing it.
Brendan will still turn up with an empty kit bag just for free water bottles for his kids.
Well, the first year that I went with him, I've still got about 4 water bottles, and I've never used a single one. So I'm not taking any.
I think DAS and Accountex, they're only a month apart, but they are quite different. So the Digital Accountancy Show focuses on the tech, I think, and developments there. Whereas Accountex has got more technical content and is probably 3 times the size, as in the place. DAS is held at Battersea Park in West London, and Accountex is at the XL, isn't it? Although I think DAS next year is going to the XL.
Oh, is it? So that just proves how much
we noticed this year how it was busier than last year. Like, you could always get a seat at one of the little fireside chats, and this year you were lucky, weren't you, Matthew, to get a chair?
Yeah,
we had to like take headphones from like other areas, and we'd be like tuning them in. So stood at the back trying to listen.
They're quite funny. It's like a silent disco. So you've got all these accountants sat there with multicoloured headsets on, listening to different things, and then you get the odd one who'll just wander around, and he'll listen to. He'll just
switch on.
He'll have his headset on all day.
Right.
It was a lot busier.
I think they're both really valuable events, aren't they?
They are.
I think Accountex is probably more valuable on like the legislation updates, what's coming up, and then obviously the Digital Accountancy Show is more centralised around software and changes and what's going to happen and what's available. But I think it's a good thing what you do, which is send some of us to one and some to the other, and then we can bring it back to the team.
Then
as
we
a
can
whole.
have a debrief, and I think we've got.
Yeah.
I think a week after you come back, I think we've got a team meeting or a team schedule to talk about the two and bring back our ideas to the business and see what we can do, how we can help our clients on that tax considerations as well for 25-26. We've just published there's 2 articles on the blog point of the website about tax planning and also tax rates and tables. So those 2 are a good little reference point that we've got in there.
Yeah, and people can budget and they know if there's any changes, what's coming.
Anything new coming along.
So that's it for DAS and Accountex for now. I'm sure we'll probably do a little bit of an episode on Accountex afterwards.
Yeah, when I've come back.
Yeah.
Well, we did say, didn't we, this year that we should, if we would have been a bit prepared, we could have got them little, what are they called? The little microphone things and walk around trying to get little videos of people. But
you might have to send me with one to Accountex.
Yeah, definitely. Yeah.
I don't mind talking to strangers.
Brendan, put it down.
All you'll hear is me going, Brendan, put that water bottle down. No, not having another. No more socks for you.
We could get a costume of risotto and get you dressed up as risotto.
Oh, yeah, because he was a rabbit,
weren't they? Wasn't there?
A squirrel, a rabbit, and
disturbing.
Something else. There were another one just wandering around.
I'm up for talking to people, but I'm not dressed up as a risotto.
Director's loan accounts.
Dun dun dun.
What the hell is a DLA?
Well, I think that's a sentence that probably quite a lot of our clients and people who have limited companies probably say. Maybe not out loud, but probably at some point in the head.
They probably only say it off the back of us saying your director's loan account is this, and they probably think, what the hell is that?
Yeah.
What do you mean?
So what is it? Is it like an imaginary bank account?
That's what it seems to be thought of. But
a magic money tree.
It's not. Yes, the magic money tree. I think when somebody sets up a limited company, and I don't blame them for why they think it, but they think, oh, that money in that company is mine. But it's actually not. It belongs to the company.
Yeah.
And you as the director, the company either owes or you owe the company money via the director's loan account. And I think that's what people get. They can't seem to get their head around it.
So if you put some personal expenses through the company, so you're using the company's money, but it's not a company expense. It goes on your director's loan account.
Correct, yeah. So if you went to, I don't know, You went to Selfridges and you bought yourself a nice pair of
wish.
shoes. Or
More like Boundary Park
Alright.
and bought myself a pie.
yeah, if you went to watch the Latics game and you bought yourself a pie and a
Yeah,
pint,
there we go.
and
Yeah.
you paid with the company
It's not
card.
entertaining.
Yes, I can vouch
Or
for
is
that.
that just for the football?
Yeah.
Well, yeah, that basically means that if you've used the company bank card to buy that, whatever it may be, that's not directly related to the business, you've then created a liability on your director's loan account that you owe the company that money back. And then the other side of it is if you put money into the company or you buy something for the business on your personal card, that then the company then owes you that money.
So I guess the issue is more of a problem if you owe the company money rather than the company owing you money,
Mm-hmm.
because there's probably tax implications of it.
There is.
So if you set up a business
Mm-hmm.
and you put money into that business because the business hasn't earned any money yet, so it hasn't got any money to, I don't know, build an asset like an office or build a recording studio, maybe.
Yeah.
Then if that money's gone in, it's in effect the company owes you that money.
And that is always the way it starts out, because to set up a business that's not trading yet, there's always startup costs. The director usually pays them personally. And that's 9 times out of 10 is the way it goes, isn't it? The director's loan account starts off as the company owes the director money because they're not trading yet and they've paid for, like you said, something like this, like a recording studio, or they've bought equipment or whatever they may need to start up. At that point, the company owes the director, and then he or she can then take that back out until it balances itself out to zero.
And I don't have to pay tax on that
No,
Yeah.
because it's my money.
it's
Or
your
it's
money.
my money
you've
that I've
put in.
lent to the company
Yeah.
that I can take back out.
The only time you'd have to pay tax on it is if you took the money out but didn't pay it back within
Yeah.
9 months and 1 day. Is that right?
Yes.
After the year end. And then we get dun 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 section 455 tax, which is not nice because it's a very high percentage.
33.75% tax. Can be avoided, can't it?
If you pay it back within that time.
Or declare a dividend.
Yeah, that's right.
Or
If the company's got enough profit
Profits.
in to clear the director's loan account, you can do a dividend and pay 8.75%.
yes, if it's basic rate, yeah.
Yeah.
For the basic rate. I think that's something that people always forget about dividends, that if you haven't made a profit, you can't pay a dividend.
Mm-hmm. And at which point you can't clear your director's loan account with the dividend. So it needs to be paid back 9 months after the year end date.
Yeah. So whilst the director's loan account isn't an actual bank account, it's what I said before, an imaginary bank account. It's a line in in your books and records, a category.
It's its own nominal account, isn't it?
Yeah, it's a little pot that
Yeah.
money goes in, money comes out, or is recorded in there. And so the director's loan account on the balance we're talking about is the net effect of those two, and it sits in the company's financial statements. If at any point you draw money out of the company and it goes above £10,000 in a tax year, and you don't pay interest on that, then there's a benefit in kind that needs declaring. So
There's loads of like reports that are returns that you have to end up doing with that stems from just drawing money. You know, one thing after the other if you don't repay it in time.
Yeah, and I
P11D.
think that's what people don't seem to be able to.
And you can see it sometimes, or I've seen it in the past, where a director's, I don't know, made a really good profit on one of his projects that he's done, and sent himself, I don't know, £5,000 and just put as a reference dividend. Well, I wanted to. All right, but you've actually made a loss in the year. You know, you can't pay a dividend. Well, I have though. And I've put dividend as they think if they put it as the reference, so well, I've paid it.
Yeah.
yeah, I think this is where us working with our clients and regular reconciling the accounts, making sure that they've got regular reports and talking to them on a regular basis helps, because then they're going to ask you, can I declare a dividend?
Yeah.
Or can I draw some money out of the business?
Yeah.
At what point can I do it?
Some people, I think, aren't in that mindset of asking if they can draw the money out of the business. I think they just, because they're not seeing that difference between themselves and the company, they don't ask if they can draw it. They just think, well, that's mine, I'll take it.
Yeah.
When actually they need to get more in the mindset of it's the company's money and not your own. Even if you might be a one-man band as a limited company, it's still not your money solely. If you get into the habit of thinking it's the company's money, I need to check whether I can take out 10 grand or whatever it may be, then I think that definitely helps with avoiding things like a benefit in kind and paying, you don't want to pay tax on drawing out your own money.
Yeah. Have you ever seen issues where mixing up personal expenses and business expenses in the bank account have caused problems in directors' loan accounts?
Yeah, quite often actually, because like you just said then, Lauren, the directors don't always differentiate between they are them as a director of the company and the company is the company. So they would use the business bank account as like they would the personal one.
Yeah,
and
I think
you'd see Tesco and
it's really important to have those separate bank accounts. So you have your own personal account for personal expenditure and the business bank account is used for solely business purposes. The odd one goes through every now and then, doesn't it? That's fine. But if you're using your business account to buy your weekly food shop every week and, pay for your holiday, then sometimes people, I think, again, they just think, well, it's mine, I'll pay it. When actually there needs to be a bit more of a deeper thought process into, is the money there? Can I take it? What will the tax implications be? Will I need to declare a dividend? What's my director's loan account looking right now? Because if the company owes them, then fine, pay for your holiday, and then that settles it.
Maybe one question you should ask is, will my accountant be ringing me up and giving me a bollocking for this?
And the answer probably is
If you've got £10,000 sat on your director's loan account,
that the company owes you.
From, say, set-up costs or whatever the company owes you, you probably have a conversation with your accountant about what's the best way of doing it, because there's probably a blend of, yes, I need to have some salary to make sure I've got a tick in the box for contributory benefits for national insurance.
Yeah.
But on the other side of the equation is, am I going to pay more tax than I need to? So if you can draw that director's loan account down, it might reduce your overall tax liability as well.
Yeah.
So it really depends on how much you're earning. I think every instance is a specific instance that you'd need to talk to your accountant about.
Yeah, each person's.
Yeah.
And I think each person manages their own DLA differently. Like I've got some clients who like to keep it a couple of grand in debit so that the company owes them a couple of grand all the time, and that just rolls year on year on year. And then I have some clients who always end the year with they owe the company, and then we have to deal with it.
Yeah.
And I think just going back to the directors setting up the business or setting up the recording studio, by the time they've found an accountant, sometimes they've not got those receipts anymore and they forget to tell you.
Yeah.
And 12 months goes by and you do the accounts and they go, actually, no.
I bought this and this.
X amount of pounds on doing this. Oh, well, where's your receipts? Where's your paperwork?
Yeah.
They have to find them, or hopefully you've got an email receipt.
So if you were a sole trader or a partnership and you decided that I'm going to become a limited company and I'm going to incorporate my business, but I'm going to move all of those assets from my sole trader business into the limited company, the balance on the date you do it, so the difference between what you own, your assets, and what you owe, your liabilities in the business, would be called your capital account. That capital account would transfer into your director's loan account because you've already paid tax on your profits in sole trader. Draw that money out as if it was introduced by you into the business. But I think we've decided that a DLA isn't a magic money tree.
No,
it's not.
I wish it was. Well, if it was, I think there'd be a lot more limited company setups in the UK right now, wouldn't they, anyway?
Yeah, they're true.
I'm setting one up.
I've got 5. How many have you got?
Yeah, but if you want any advice on running a limited company, give us a shout at James Scott. Go on the website, jamesscott.com, and
Ask for Matthew.
book a discovery call.
Yeah, specifically Matthew. He's not busy enough, is he, at the minute?
Everybody's welcome.
Oh, and you've had a question this week, haven't you, from a client?
Yeah, we did earlier on in the week, asking whether they had to pay tax on loyalty points. So things, I think they specifically had an American Express card, which they got loyalty points on, but similarly, I think it applies to all sort of loyalty points like Tesco club
Cashback
card
rewards
points and things like
Tesco
that.
club card points.
Yeah.
Or yes,
Yeah, and it was it your client?
it was. And so what was the
I
answer?
think they asked, did he ask you about it? Because I was a bit like, I don't know. Matthew?
I'm not sure that face comes over well on a podcast. Yeah, so I think the
It's
answer
not really
is
a question that you get asked very often. It doesn't ever really, well, I suppose that's the
It's
first
a
time it's
valid
cropped up for
question.
me.
Yeah, it is a valid question. I
it
think,
is a valid
because-
question. And I think the answer to it is no, you don't pay tax on it as long as it's just given in the normal way and it's available to everybody.
Yeah.
It's not a specific promotion aimed for you.
Yeah.
I think this week the Inland Revenue have just released, or in the last couple of weeks, they've released what they call their spotlights. So what they do is they look around and they've always got their ear to the ground of what's going on in tax planning or tax schemes, they call them.
Tax
And
avoidance
where they
schemes.
see there are issues, or then they will highlight it. So one of these schemes is where a company would buy something else that doesn't come across well on a podcast, inverted commas, advertising.
Yeah.
And in return for that, the directors get loyalty points. And I think they're sort of 80% of what you put into the advertising spend.
Wow, so that's quite a
So-
high percentage,
So
isn't
they
it?
try and claim the corporation tax relief on the advertising, but 80% of that value goes to the directors on a prepaid credit card or debit card. So the Inland Revenue picked up on this, and obviously because this is disguised remuneration,
Yeah.
and basically said that it's a no-no, and they will chase it and look to tax it.
And they'll probably increase the amount that they would have paid anyway for doing this, won't they?
Yes,
Which is what they usually do.
So you've got penalties, you'll have interest,
Yeah. Wow.
and then the costs of defending it as well if you think you're in the right. So
Can you
Yeah.
imagine if we was doing a tax return for a client and we had to ask them, can you send us your annual Tesco club card statement? Yeah, wherever else
Yeah.
you've got these B&Q everywhere, like, and you had to go through the value of the points and what they was worth and whether they'd spent them or not.
Yeah. But that what Matthew's just said, 80% is such a high percentage because, I mean, club card points, I think you get 1 point for every £1 you spend.
That's
which is
right.
obviously it's
Something like
1%.
but it's, so £10,000 spend in a limited company, they get 25% tax relief on it,
Yeah.
or think they're going to get 25% tax relief on it. The director gets £8,000. The people that have arranged the scheme get £2,000 for arranging it,
Yeah.
and then it doesn't work. So
So the moral of the story is don't do that and spend your club
be
card
very,
points.
very wary about anything that sounds too good to be true,
Yeah.
especially in tax
Stick
planning.
to the club card.
Yes, stick to the club card.
Well, I think we're all talked out after today, so we'll leave it there.
Thanks for listening.
See you next week.
Bye.
Bye.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor, Katie Allan and Lauren Thompson. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.